Ladies and gentlemen, good day and welcome to the earnings call of Arabian Petroleum Limited for the financial year ended 31st March 2025. The floor will be open for questions once the management presentation concludes. Please note, today's call is being recorded and may include forward-looking statements based on current expectations. These involve risks and uncertainties that could cause actual results to differ materially. The company is not obligated to update such statements except as required by law. Listeners are advised not to place undue reliance on them. Representing Arabian today, we have Mr. Manan Mehta, Whole-Time Director, Mr. Dharman Mehta, Whole-Time Director, Mr. Hemant Mehta, Director, Mr. Vandan Mehta, Director. Without further delay, I now invite Mr. Manan Mehta to share a brief overview of the company's performance and provide insights into our operations. Thank you, and over to you, sir.
Sure, thanks. Uh, so, good evening, one and all. Welcome to the earnings call of Arabian Petroleum Limited. I will have a brief presentation to make on the overall achievements of Arabian Petroleum in the last financial year, and then maybe we can take on a few questions if you may have so. So, let me start with the presentation. So, for the new, I would say investors who are there on the call, let me give a brief overview about the company as well. So, Arabian Petroleum basically is into two major sectors in terms of lubricants. One is the automotive and one is the industrial sector. So, we operate our brand Arzol under both the segments. And automotive, we have a whole comprehensive portfolio of different product lines, which includes motorcycle oils, passenger car oils, diesel engine oils, and many other products per se. In the industrial, we have our mainstream products, we have the metalworking products, we have greases, and many other products which are required for varied industries that are present across India as well as across the world. Some key facts and figures. Yes, we are a 250 plus employee strength, 300 plus distributor strength overall, 25 plus countries exports. We are present in almost 22 states across India and expanding further. We have our own laboratory, which is a enable accredited lab, which very few in the industry per se have. It's also called as ISO 17025 accredited lab. Yes, we have a whole lot of testing equipments within this lab, in which we undertake our research and development projects also. We have 2000 KL of in-house storage. Further, the company has also procured a lease storage for raw materials, which is outside the company premises on different terminals, which is near the port. So we have about 2000 KL plus of additional storage that has been acquired over the last year, which is on lease terms. Additionally, we have about 1000 plus KL of finished storage capacity within the premises and more than about 1000 KL plus across warehouses in India, which is about at 10 places or so. We have about 500 plus different product range, which we are producing. The total production capacity is about 48,000 kiloliters per annum. So coming to the financial analysis, what the company performed last year vis-a-vis the FY 2024. So the overall revenues grew by about 8.93% from 262 odd crores to 285 odd crores. At the same time, the volumetric growth was more than 10%. The EBITDA grew about 16.5%. Our PAT margins grew to about 33.5%. So we went from 6.8 crores to about 9.08 crores in terms of PAT margins. EBITDA margin also as well as grew by 7%. Yes, we see the PAT margin growth by 22.5% in terms of percentage. And the reserves and surplus, they grew by about 23.79%. So thing to as well as notice is that the non-current liabilities, including debt, fell down by 17.94%. The overall cash flow went from negative 9 crores to about positive 12 crores. And this was one of the concerns, or I would say that pointed out by some of our marquee investors. And we are happy to state that the company has gone operationally cash flow positive in this year. And we intend to do so in the coming years as well. Some operational highlights of the year. Yes, the leadership has been constantly kept on strengthening. We have recruits across board, and Mr. Kishan Sata, he joined in as a key appointment, bringing in a lot of valuable expertise from different domains across industries. At the same time, yes, we are seeing leadership strengthening also coming in this year, and many appointments and joinings to happen very soon. There are a few major milestones which we achieved in the international projects also, like we received the BRO orders for the construction work in Bhutan, and that was one of our key orders that we received in the last year in the government space. In the private labeling space, yes, we started manufacturing for a very well-reputed brand called as Endurance, again a listed company, giant in its nature, holding more than 8,000 crores of revenue. So we did start some private labeling work from them, and this year also we are expecting good orders from Endurance. Vendor registration was also done for a lot of government companies, for instance, Western Railways and many other companies where we were able to do our vendor registration. Even the Air India Transport Services, as well as the Brihan Mumbai Municipal Corporation, the Thane Municipal Corporation. So we did vendor registration at many places. Yes, there are a few OEM business breakthroughs that we achieved in the last year. One of them was Putzmeister, where we have a concrete pump manufacturing company who's sourcing oils from us. We also got the Daimler Trucks approval, which is the first to be, first Indian company to get a Daimler Truck approval, Indian origin company, I would say, to get a Daimler Trucks approval for two products, 10W40 and 15W40. As well as this has been also shared under the updates that the company is also expanding into the transformer oil business. And in India, we have a lot of transformer oil manufacturers, as well as the consumption of transformer oil is huge, both in India as well as abroad. So we are also focusing on development and capacity expansion in the transformer oil business. Apart from that, yes, there were many distributors who were appointed, the 5 distributors which were appointed in the industrial sector in different regions. We also have more than 13 plus distributor appointments in the automotive space. We added a distributor in Dubai for APL produced additives. Basically, we produce, as we had mentioned in the calls before, we are in the process of backward integration also, and we were successful in appointing a distributor for selling of products or additives which are produced by APL. Now, these are not lubricants, but these are additives which are required for producing those lubricants. There were many clients which were onboarded in the last year. In the industrial side also, as well as on the export front as well. The government and institutional supplies, like we are in process to supply lubricants not only to Air India Transport Services in the Mumbai and the Maharashtra region, which we were able to do last year. Now this is being expanded to across India, across geographies, wherever Air India has their own transportation services fleet available on the ground. We also did a lot of supplies to Air Force Station in West Bengal. Even our Indian Air Force approvals for certain products and trials for certain products is also under place. And this, although it's a time-taking process, but this is happening simultaneously as well. There are a lot of tenders that we won in the last year. The key ones being probably the Mumbai Airport, the Solapur Municipal Corporation, the Thane Municipal Corporation, as well as Navi Mumbai Municipal Transport also. We participated in a lot of events, which I'll take you further in the presentation. Apart from that, yes, we secured the trade license for Dubai, as well as now we are listed with BPCL also as their customer for the solvents that we may procure from them. As I mentioned to you, yes, the certificate of formation and the trading license was received last year for the Dubai company, which is a wholly owned subsidiary. Arabian Petroleum Trading is the name of the company, and we have started operations in Arabian, and this year we will be expecting good growth from that market as well. A new warehouse facility was also launched in Pune. Pune being one of the top, geographies where we are selling a lot of industrial and automotive lubricants. We had for customer service support, we launched a new warehouse facility, which was again leased and third party operated. There are a lot of participations in the exhibitions that we did last year, right from Dubai to Apex in USA, to some domestic exhibitions like the Mac Auto in Ludhiana, the Imtex in Bangalore, as well as the Chem Expo in Mumbai. So overall, the exposure that the company got in these exhibitions was phenomenal. That was overwhelming response in terms of people who want to get associated with Arabian Petroleum and Arzol as a brand. So looking forward to capturing some of those leads and translating into business in the near future. And some of the leads have already been translated to business coming from UAE as well as from Mac Auto in Ludhiana. So just to recap on the journey as how we started in 2011, then we moved on to 2015 to Ambernath from Taloja, and then gradually, setting up the automotive manufacturing in place, starting private labeling, to expansion in different geographies. Now we have about 10 plus warehouses across India, and obviously the South India warehouse also is going to be by the coming in the coming 2 months that will be also operational. So what's the kind of the markets that we talk about in India? Yes, the industrial is about 54.8%, the commercial is about 28%, and the consumer is about 17.4%. Out of this, which is about 3,000 kilotons of total market, APL still contributes to 24.5 kilotons. Now that's a long way to go for us for expansion, and as I've been reiterating in my previous presentations also, lot of scope for us to further grow in not only in the Indian market but in the global lubricant market as well. So some active projects and product enhancements that I would like to speak about is the development of P-label type rust preventives, which happened in the last year. Rust protector for submersible pumps that we developed in the last year. Now, some of you may feel that lubricant is just oils, but I would say that lubricant is not just oils. There are a lot of water-based chemistries which we produce and we sell that also are classified under the big umbrella of lubricants. So rust protector for submersible pump is one such product. There are oil type also, but there are water-based also. So when we talk about water-based rust protectors, these have 0% of mineral oils. So these ideally are not lubricants, but yes, they are classified as lubricants. And water-based chemistries also have a very big market in the Indian space as well as markets outside. We also are looking to produce certain esters for refrigeration compressor oil. Some of these are being outsourced for now, and some we intend to produce in-house. Along with the ester production that we are planning, we also intend to produce fatty acid amides, products like sorbate and monooleate, which ourselves we have in-house consumption, as well as this can be sold in the market outside also. So this is with keeping in mind the cost reduction that we intend to do by backward integration. And there are few products which were identified last year, now few projects which are identified for this year also, where the company will focus on backward integration. Drawing fluid industry is also one big industry which we are focusing on. So along with aluminium now, I am happy to share that the copper wire drawing products are also in place, and we intend to sell them also in the coming few months. Some new products that I would be able to talk about is the synthetic chain oil, which is used in certain stentors in the textile industries. It is also used in chains wherever there is a high temperature applications. Yes, the Durazol 10W40 was also launched. At the same time, we also formulated gas engine oils, which are now being very popular because of the government enforcement and thrust on usage of CNGs, PNGs in different sectors altogether. So we are seeing good, growth in the gas engine oil segment also. These are few of our product lines which I have earlier spoken about. Yes, when it comes to private label, you may probably see on the list what kind of customers we are producing for, and most of these customers are with us for the long term. The tender sales also are constantly expanding, and the exports is also growing very well for us. Last year, although the export growth, uh, I would say we have grown over the last year, but this year we were expecting a good jump in the export segment, because last year, because of key issues that were in the supply chain, there was a lot of delay which was happening, and that probably impacted the timelines or the TATs that we normally have for exports. So yes, this is in brief about our clientele, what kind of companies we are working with. As you can see, these companies are across verticals, across sectors. We are not very sector specific. We service all the lubricants requirement that arise in any kind of sector. Now, Linde is one of the customer which was recently onboarded, and you might be possibly able to see that on our slide as well. I'm sorry. So the industries that I was talking about that we serve are very, very diverse in nature. And no customer for us is, we don't follow the 80-20 principle, Pareto's principle normally in terms of our uh, sales volume. And we are very diversely spread across different customer bases. And that reduces the risk also for us. If one customer, if we are probably losing out on a customer, does not pose a huge risk to us. The geographical footprint, which I earlier also spoke about, and the exports, as I told you about 25 countries we have been doing. So we already added some exports to Peru, Chile last year. I mean, these were certain countries which were not doing previously. Even for that matter, Suriname, and we appointed a distributor in Fiji also. So this has been some of the highlights in terms of exports last year. We were privileged to be honored as one of the top 10 lubricant manufacturers, specifically metalworking fluids manufacturers, by Industry Outlook magazine. And as you can see, our name was right on the top. So yes, there have been a lot of approvals which we have taken, and you might be able to see a few of them last year also, a few of them on the slide also. Last year, as I mentioned to you, we also took the Daimler truck approval, which is also there on the screen. So manufacturing capabilities, as I mentioned to you, more than 40,000 kiloliters of oil that we can produce. We have a lot of in-house testing equipments, and which as a part of expansion, the R&D facility is now ready at our same premises, and we intend to procure more and more laboratory equipments to further strengthen our R&D and further bring customer value addition by giving them the best quality products at the best possible pricing. So management profile, I'm sure that most of you might know possibly the directors. Yes, my father along with my mother, Hemant Mehta and Rachna Mehta, are very active in the business, and they are also the founding members of Arabian Petroleum Limited. Along with my brothers Dharman and Vandan, I take care of the operations as well. Mr. Kishan Sata, he is a VP operations, and he's been instrumental in streamlining a lot of processes and bringing in a lot of efficiencies within the organization. So I'm sure most of you might have possibly gone through the P&L and the balance sheet, but still, if there are any questions on the P&L and the balance sheet, we would be happy to take a few of them as time permits. As I mentioned to you, the EBITDA is at about you know 864 for half year first, and half year second. It was about 770. So the profit after tax for this year was about all both halves put together was about 9.08 crores. So the total balance sheet grew from 99 crores last year to about 106 crores this year. And as I mentioned to you before, your company has been, looking at reducing debt and, the cash flow positive impact that the company has had in the last year is helping the company to drive growth further. So that is it from my side. Thank you, all the people those who have joined here for the earnings call, and happy to take questions if any.
Thank you, sir. We'll now begin the question and answer session. Participants who wish to ask a question may kindly raise their hand. Alternatively, you can also type your question in the Q&A tab below. We'll take the first question from Varun Agarwal.
Hi, am I audible?
Yes, yes, yes,
Yeah.
Varun.
Thanks for the opportunity and great presentation. So I understand that our production capacity now is about 48,000 KL per year. So I want
That's
to
true.
know what was the volume that we have done in FY24 and 25 in terms of KL?
So, in terms of KL, we did about 20,000 KL per annum in terms of last year. As I have previously mentioned on some other calls also, that sometimes the bottleneck is not the production.
Okay.
The bottleneck is the filling, which happens, which is having a certain cycle time.
Right.
So if we are able to produce 48,000 kiloliters of product, which we may still be able to do within the same facility, the bottleneck still remains the filling part of it. So there are
Okay.
ways and means to take care of it, as I've identified before also, that there are certain co-packers which have identified, which you are currently working with also, who can
Okay.
probably help in debottlenecking the filling part, where we can produce more quantity and we can get the filling part outsourced from a co-packer.
So what is our filling capacity then?
So filling capacity, I would say currently we are at about 75% of our filling capacity when it comes to small packs in general. So when it comes to like the pack size is from half a liter to about 20 liters.
And in terms of realization per KL, last year and this year, how was the realization?
So the realization per KL, if I may talk about the volume growth as I told you, was about 10%, but the PAT growth was about 33 odd percent. So
Right.
realization, you can probably understand the pro rata realization which increased over last year. So about 23% more profits were generated, probably from the same volume.
Okay. And what is the impact of this oil prices increase, which is happening due to the geopolitical issues on our business?
Uh, I would say that this has become the new normal now, and
Okay.
I mean definitely it has an impact on the oil prices. First is speculative because you don't really understand what is going to happen in the near future. A war may happen, war may stop. So speculative price increase is what happens normally when such a situation happens. So
Right.
we see a very short-term increase in the prices when it comes to speculation that people feel this may happen. People feel Iran could be bombed severely. So there could be a number of speculation which may arise. So we try to secure the. So what happens is that it all depends on what country we are specifically talking about. Now, when you talk about Iran, for example, so there is a lot of product which is channelized through Middle East, but it comes ultimately the origin is Iran, but it's channelized through Middle East, which comes to India. Now, specifically, these products are Group One base oil products. Now that supply chain may be impacted in the near future, and the company that's why is aiming to stock as much as possible in terms of the Group One base oil, which is available in the market as of now. So yes, the immediate, I would say, the reaction to such a kind of a knee-jerk reaction to such a kind of a issue that may, or the situation that may arise is certain securement of certain cargoes that is available in the market. So we normally tend to stock somewhere about 1.5 month of inventory, so that we are not left dry with any kind of products that may not come in the near future. By the time things normally stabilize, either the war de-escalates, or I would say the speculative aspects cool down, and it comes to the new normal. It may be higher, it may be lower, but it comes to a new normal where we don't see too much of a spike every day happening. So then you're able to gauge the market and what should be the way forward. So that's what normally we do when such a situation arises. Obviously, every situation is quite different. Every situation commands a different thought process altogether, a different strategy altogether. But we have to actively, talk to our suppliers, talk to our customers, and gauge what would be the best strategy at that point of time.
Okay, thank you. I'll come back in the queue. Thank you.
Sure.
We'll take the next question from Sahil.
Sahil, if you are speaking, we are not probably able to hear you.
Sir, in the
Ma'am, I
meantime, we
think
have some
probably
questions
we are
from.
not having Sahil. We can take the
Yeah,
next question.
okay, we'll take the next question from Mr. Smithji.
Am I audible now?
Yeah,
Yeah.
One question I had that in the automobile segment, which type of oil offers us better margins? Is there any segregation for that?
So it is not that which type of oil. I mean, obviously the synthetic oil. If I have to answer you, the best way, then the synthetic oil category will offer the best margins. Now the synthetic oil category is not just, I would say, restricted to the motorcycle oils. It is not restricted to the passenger car oils, or nor it is restricted to any other segment per se. So synthetic being a premium oil, definitely we can command better margins on it. So that would be the best possible answer to your question. But it is not very sector specific, or it is not very specific to the application.
All right. And any details on this Bhutan order that we have recently won? What is that? Can you explain that?
So I will not be able to tell you the value per se, but yes, it was for Border Roads Organization. The BRO is basically setting up, so Indian Army basically does some work for Bhutan government when it comes to building of infrastructure in Bhutan. So because the terrain is such that you require very skilled people out there. So in that particular project, which is called as Project Dantak, earlier only three brands, that are the state-owned brands, HPCL, BPCL, and IOCL, were enlisted as the possible suppliers. So we were able to crack that, and with our credentials, with our quality, with our assurance, and obviously with our connections with them, we were able to enlist Arabian Petroleum also as one of the suppliers for lubricants. So that's when we got the order also for those lubricants which are required for Project Dantak.
And this opens an opportunity for us in other projects as well for the BRO, if possible.
Absolutely. So BRO has been our customer at different places. BRO all across the border. I mean, right from northeast to Punjab to certain parts of Uttarakhand. Also, we have serviced BRO before. The quantum has not been that significant when it comes to as compared to Project Dantak, but yes, BRO has been our customer.
One thing, sir, recently I saw that two credit ratings have given us issuer not cooperating guidelines. So what is the issue? Are they deliberate on us or it's something on our end?
Yeah. So basically,
Maybe I can
so
answer this.
we, yeah, yeah, Dharman
Yes,
probably can
yes.
pitch in.
Yeah, so basically, the agencies were not asked by our bankers to take any outside rating agencies. So that's why they have been mentioned that, we are not cooperating. But yes, we will be revising this, and soon we will be getting an updated one.
All right, sir. Good to know. One question from Manan, sir, finally. What sort of outlook are we looking for FY26 and 27 on the top line exactly?
Yeah, so as you are aware that definitely in terms of numbers, I can't really project any numbers per se. But then yes, we are seeing robust top line growth this year. With regards to, I mean, last year the demand had been subdued because of the political scenario, the elections in India, and so overall, as you know, that this parallel economy which runs in India. Normally it takes time for the payment cycle to really flow into the market. So the demand was subdued, but this year we are expecting a robust, increase in the top line also with in line with our expectations, and the same would continue for our profitability as well.
Okay, sir. And have there been any internal discussions to release some quarterly updates going into FY26? Is that a possibility?
Uh, So we would be giving every monthly updates on certain platforms. This updates would not be financial updates. This would be more operational updates, and not mentioning numbers. But then it would be possibly wherever we can give some financial update. Also, we'll be trying to give them. So these monthly updates, maybe our IR team of InPortal can probably help you to subscribe to, and we would be having these kind of updates coming in regularly for our investors to have vision on the company, what the company has been doing, and what it plans to do in the coming future.
All right, sir. Great to know. Thank you.
We'll take the next question from Mr. Smith.
Yes, hi, can you hear me?
Yes, I can.
Yeah, hi, Mananji, how are you?
Hi, good. How are you, Smith?
All well, all well, all well. So, again, just to understand the numbers a bit better and to play the devil's advocate, right? Like margins year on year have probably increased, but like if I compare it to the half one, on a net level, the margins have decreased, I think, due to an exceptional loss and some spike in other expenses and employee costs. So, one, I wanted to understand, like at steady state, what should we bake in as margins going forward in this financial year and the subsequent ones? And if suppose we can provide any anecdotes of if suppose we are projecting an increase in margins going forward, why do we feel that we'll be able to achieve those? I mean, I don't want exact figures, but what direction are we going to head towards from a margin perspective?
Yes. If you might have heard probably me on the previous calls also, one is obviously the margin growth has been, attributed to a lot of things. One of them primarily being the, I would say, basal sourcing part, where that is our major cost. So with the working capital money that was infused by the proceeds of the IPO, we were able to really bet on a lot of good refineries, lot of good products, and based on our expertise in terms of formulating products with the best possible pricing and the specs. So we were able to drive margin growth from them. At the same time, when you stabilize with the customer, typically the customer does not really bother about the pricing per se. When the customer knows that you have been constantly servicing them up to the right level, the quality of your product is good, and they do not really stress too much about the pricing because they want a consistent supplier with a consistent product quality. So for instance, for exports, for that matter, we were able to drive margins better because we stabilized in few of the markets. We knew that this customer with us, is regularly buying somewhere about 100 150 KL a month. So the prices were kept in parity. Stability was given to the customer. I mean, the whole year probably the prices may have not been moved by 1 or 2 odd percent. But then obviously when the prices went down, we tried to stock more. When the prices were higher, we did not pass it on to the customer that much. So overall, the profitability improved also because some of the markets really matured for us. Some of the customers also really matured for us. So they just see, what is the value that we are giving to their applications. So that really resulted. So for example, if I talk about a customer called as Varroc, or sorry, Endurance, not in the private label segment, in the I would say in the industrial segment where they use oils for their factories, we were able to extract possible prices which were better than their peers. This was primarily because of the warehousing that came in Pune. Majority of the plants were Pune. They wanted just-in-time deliveries. So obviously that comes at a little bit of cost. But then when the customer is very happy with the service level that you're providing, the customer does not really speak about the costs that are involved here. So that is what really helped us to drive the margins in terms of sales. And I also mentioned to you, purchase also played a very significant role. Yes, this year also there has been a constant drive to backward integrate few of the products, and if we are able to successfully achieve that, I'm sure we will be able to keep the margins intact and the margins growth intact, I would say. So we have been growing. If I would say, if I analyze last 5 years, the margin growth has been about 25% on absolute terms. We will be able to retain that over a period of next 2 to 3 years. That's what we feel, because these kind of projects, this kind of sourcing, this kind of customers are now maturing. It is in place. Somewhere we are able to command premium also. At the same time, we are also focusing on we have got in a policy for the fighter premium and specialty segment. We have incentivized our distributor to sell those premium and specialty products. So that is also one of the key factors that will also help us in driving the specialty product range. At the same time, it is a forward-looking statement, but I would also like to say that there is a special project which is ongoing, and hopefully it goes through. We would be also coming up with a very, very different kind of a technology, with somebody under the umbrella of APL, for the metalworking formulations and metalworking fluids. So hopefully you should hear from us, in a couple of months on that as well.
Perfect. Thank you. So basically, what we're saying is backward integration, which will allow us to become more efficient. And as we mature and probably offer customers a custom solution instead of providing commoditized items, the margins could probably go up going forward as well, from within the same customers and segments, right?
Absolutely, absolutely.
See, again, the reason I'm asking you this, and again, this is to probably address the elephant in the room, right? Like most of investors would probably want to know how are we going to unlock value, or how is the business going to get the right valuation multiple? And I see only two things which could probably allow us to get that, right? One is either a solid top line expansion, which signifies that the TAM is growing fast and is the market is huge, and the second is bottom line strengthening, right, which signifies that our moat is solid, right? So I'd like to understand from you, from like in this perspective, that how are we placed, and if there are any limitations owing to the nature of the industry, which is not either allowing us to grow on the top line bit faster or strengthening our bottom line to like a double digit figure, which is where most investors probably give like a solid valuation to any company.
No, that's true. And I think the answer to this is not just, I would say, either. I mean, there is no two thoughts whether I should be choosing the top line growth or I should be choosing the bottom line growth. The answer is like, yes, both are important for us. There are certain product segments which definitely gives us the top line growth. And as I mentioned to you in the presentation also, the transformer is one such segment which is big in its nature, and it probably can give us good top line growth also. Not just that, yes, there are a lot of customers, team that we have tried to build in the last couple of years, and that will also help us translate on the top line growth, sales also. Exports also, we feel that last year was probably not the best out of the years that we have been working on in terms of growth. But this year, yes, I mean, obviously geopolitical situation this is going to be the new normal. But if at least our current markets are, they are maturing, they are going to order consistently, then I feel that export is going to give us a good robust growth this year also. So there is no two thoughts that whether we'll be focusing just on the top line growth or just on the bottom line growth. The focus will also always remain on both. So there are certain government tenders which probably would not command that kind of margins, but then yes, it's necessary for us to be there in that space, be there within the customer, to probably have some product where we can add value to the customer and extract some margins from them. So it's like probably you can't choose one of the two for our industry. We have to consistently try and strive for both top line as well as bottom line.
Fair enough. One question on the geopolitical thing that we're talking about, and I think you had explained this in the last call as well, that we are more dependent on base oil pricing, and we are more dependent on base oil, which is not as volatile as crude. But given the current geopolitical volatility, which is prevailing in times today, and because I think we had like a 2000 KL storage capacity, now we've increased it to 4000. Do you think with the current situation, we would have to increase it more, or how do you see this progressing, or are we working on other technologies which don't require the kind of base oils or minerals oils which are, majorly crude dependent, like you spoke about the water technology as well. So how are you seeing this, and how are we placed in terms of procuring raw materials which does not disrupt our entire production thing?
Yes. So if I talk probably at the start of the year 2024, we were probably at about 2,300, 400 odd KL of capacity, which at the end of March probably we were somewhere about 4,000. But today, if I talk about sitting here in the mid of June, probably I am at 4,400. So constantly we are trying to expand capacities in terms of raw material storage. And what we've seen is that the more we stock, the more the benefit we are getting in such kind of geopolitical uncertainties. Yes, at times the tanks have been empty also, but when we analyze overall what the overall year has been, we definitely see that even though we've incurred the cost for storage, but it has given us value for the time that it has been with us. The product I'm talking about, the raw material. So yes, moving forward, we definitely foresee that both in terms of raw material as well as in terms of finished, because the entire supply chain holds close to about. I mean, if I talk about raw material, our own factory as well as the finished goods storage, the total capacity that we store is not less than somewhere about 6,500 KL, 6,500 KL approximately. So for all put together, for even for finished good, and vis-a-vis a sale of somewhere about 2,500 odd KL. That's like a big supply chain buffer that we have when it comes to times like this. Yes, sometimes we have to be lean when we foresee that the prices may fall because of certain other factors. So we tend down to get lean on the raw material stock also, because you can't really evade the finished good stocks that is kept for the customers. But yes, we tend to get lean on the raw material. And the second point which you spoke about is moving or shifting probably from oil-based chemistries to something else. So that is what I was talking about. Probably you will hear us from us in a couple of months, that water-based chemistries or something on the chemical front is something that we as a team we are working on. If these kind of technologies are probably replacements to certain oil-based products which are there in the industry. So we are working on those projects, and hopefully this should go through. And I mean, those kind of products will help us to offset the impact that these kind of geopolitical tensions that may arise. But having said that, still, I would say 80-85% of our business still remains on the oil front, which we need to really, foresee and envision what could be the best strategy to have in place in such situations.
Fair enough. Look, just one last question that I had. One theme that I'm seeing play out, and you also spoke about, is electrification in the country. And one obvious byproduct, beneficiary byproduct is transformers, right? So I think we won a 40 lakh order last year. So how are you seeing this segment perform for us going forward into this year? Like, are you seeing that the traction could be much higher? Because 40 lakhs is out of like the 300 crore kind of a number that we've done, 40
Right.
lakhs, not even 1%, right? So how
So,
are you seeing this segment play out this year? Because I think the entire theme in India is electrification, right? So what is your take on that? And second is the 48,000 KL production capacity that we have, and we're doing close to 20,000. So this 48,000 gives us a runway for how many years? Like, at what point do you think we'll have to expand and probably add up the production capacity?
yeah. So, answer to the question one, yes, that's why this conscious call of getting into transformer business, although it's a volumetric business, but then still, and in some cases it gives us good margins also when you are probably one of the two or three suppliers that are there at the customer end. So, yes, the transformer business is stabilizing for us. We are thinking of capacity expansion already. For that, there are some capex which we will be needing. We are evaluating the capex, expenses. We have obtained the quotations for the same, and the company is evaluating the same, how to move ahead in that. At the same time, we see a stabilized business of not less than maybe somewhere about 50, 60 odd lakhs rupees a month. So translating to about 6, 8 odd crores on top line on a annual basis, which is again probably poised to grow. So this I'm talking about the current monthly run rate that we are probably doing, and this will obviously grow in the coming near future. So yes, this could probably add up to about in the next couple of years to about 25, 30 odd crores of revenues that could come from this segment. At the same time, yes, we have to also be conscious on the margins that this business is giving us and play on the certain approvals, the quality of the product, as well as targeting certain export market, because for exports also it's a very huge business in terms of transformer oil. So for instance, we did 2 shipments in uh, if I correctly remember, Dharman, correct me if I'm wrong, it was in Latin America that we did shipment for transformer oil also. So we are
Yeah,
evaluating
that's
on the
true.
export also what we it can get it from get for us. Probably if you could just repeat the second question that you asked, then I will
Yeah,
answer that.
asking about the 48,000 KL production capacity that we have, and currently we're doing close to 23,000 KL in production. So at what point
27,
this
27. Yeah.
RMJ?
Yeah. Yeah. So the production capacity, as I told to Varun as well, that one is the production capacity and one is your filling capacity. So
Correct.
production 48,000 kiloliters per annum can be in the same premises. We can add two more reactors. We have a provision to add six more reactors, by the way. But if I add two more reactors, the production capacity can become from 48,000, it can become 56,000. So for us, producing in bulk is not a very big concern. The concern still remains, filling it into pack sizes which could be smaller in nature. So for that, as I told you, we are about 75% full in terms of capacity. Now we probably are assessing whether to start our night shift or not. So there is the situation that we are in currently, and with that, with probably night shift also operational in a year or so, we may be exhausting our filling capacity for certain product lines. So that's the reason why the company has also identified co-packers who can help us in packing those products which we are producing in-house. At the same time, yes, the time is also probably ripe for us to scout for certain opportunity or for certain lands which can be acquired from now and see a capex maybe in 1.5, 2 years. So it is not just capex that we plan to do. We are also open to see certain leased facilities that may be available for a long term, like for example a 10-year horizon or a 5 plus years basically horizon, where we are able to offload some of our production that we are doing currently and move, debottleneck our existing capacity.
Fair enough. And you can choose to answer in terms of figures. or not? Just to, like, would it be right to say that this year we would be growing on the top line bit as well and on the bottom line instead of just the bottom line, probably as it was in the case of financial year 24-25? Like, would it be correct to say that?
Yes, of course. Yes.
Okay, perfect. Okay. I'll get back in the queue. Thank you so much.
We'll take the next question from Mr. Rajesh.
Yeah, good evening, sir.
Good evening.
Yeah, I'm audible perfectly?
Absolutely.
Yeah. Mr. Mehta, the thing is that you just informed us that you are doing in airport services and the business over there for the aviation in all of the Maharashtra, right?
Yeah.
Yeah. So can I know what is the approximate percentage that business we are doing with the aviations as of now?
See, aviation, one is the private aviation and one is the public aviation. Now, when I talk about Indian Air Force particularly, the business quantum there is different and the private aviation. Now, when I talk about private aviation, this is more for the ground services that they have for the aircrafts. Basically, when you talk about, say, when you see those baggage carriers, when you see those forklifts, when you see those, ground fleet, what they have on the floor. So it is more supplies to those kind of, ground fleets which they have. So for instance, there was a tender from AI services in Maharashtra, which was somewhere close to about 25, 30 odd lakhs. So this may be the case elsewhere also in other geographies. I'm exactly probably don't know the number that may be there in the other geographies. But then yes, Delhi may be more, Kolkata may be more, the other relatively smaller airports may be less. So this is the kind of requirement, that is the requirement for probably for 3 months, which I'm talking about. So this is the kind of market size that can be established with a single carrier, which is Air India. Now that can be translated to other carriers also. For example, not just Air India, but even their, I would say, food partners like TajSats and all. It's basically something that also requires those lubricants. So we are also working on those kind of customers as well. Secondly, when it comes to the Indian Air Force in general, the quantum may be very less as compared to our total turnover. Say, for example, not more than 1%. But then, when we're doing these projects with Indian Air Force, these are very very long term projects and these require approvals from multiple authorities. So, for instance, one product after laboratory testing, it may require ground testing on the fleet, practical trial on the fleet on the ground. Once that is passed, it goes to airborne testing. Once that is passed, then they will issue us a letter, and capacity verification will be done. Then they will be issuing us a letter to supply. So the entire gestation period is not less than 2 to 3 years. But we are working on 8, 9 different products for Air Force, which the currently Air Force probably has a single source for these kind of products. The gestation period is long, but the fruits are also better because the entry to barrier is very high. Margins are better. At the same time, the competition is very very less. So that's how we are working on, and once probably we'll see the results in a couple of years what this translates to.
Yeah, the thing is that you told that it's regarding the competition. You're having less competitions, right? But
Yeah.
obviously you would be going through GEM portals ordering. Or is it the OEM? We get the
No.
OEM orders or the GEM portals?
So there are two things. Now, when it comes to GEM has an open tender, GEM has a limited tender also. When it comes to open tender, it is open for all to participate, and whoever is the lowest possible price, quotes the lowest possible price, wins the tender. When it is a limited tender, only specific makes are approved. Today also, the single source supplies are being supplied through GEM portal only, but it is restricted to that one particular source. There is no other option for the buyer to take any quotation from somewhere else. Although the procurement happens through GEM, but it is a very limited tender. So that is what I intend to say when it comes to having less competition. So it will be a limited tender.
Okay, finally, and one more thing. that once we get approved for the AI airport services, are we eligible only also for the other aviations as well?
No, we are already approved for AI. That's what I would say. And that does not really mean that I can go and supply to Indigo also. AI is only for AI. Our
I
product,
understand.
yeah. So HP, BP, IOC, and Arabian Petroleum are the only four brands that have been approved by Air India for the supplies of lubricants for the ground transport services. Now the same exercise needs to be probably done with Indigo or the other airline majors, and that needs to be translated into business.
Okay. So can't we get a direct approval for them? Once we are approved with one of the aviation and ground support, can't we get approval from the other airlines as well and start the work immediately over there?
Life becomes easy. The first approval takes a lot of time,
Yeah,
really
I
takes a lot
understand.
of effort.
Yeah.
Life becomes easy, but it is not that it's like a uh, of discretion
Pardon?
on. So any which ways, what I was answering is that it can't be a discretionary approval that once it is approved for Air India, it is approved for other companies also. So I mean obviously when we take this credential and go to other customers, it becomes easier for us.
Okay, that would be fine enough. So can we have the annual contracts with the aviations like airport services or Air Force like this? Or you're just for the limited tendering, right? So as you told for the limited tenders,
Yeah.
can't we tell them to go for the annual contracts and try it out there?
It's difficult to dictate terms there because of their obviously inherent policies that they may be
Sir,
having.
it's government companies.
Yeah, having
Mr.
said
Mehta,
that,
it is all government companies.
no, I completely understand that. But having said that, yes, we do try to have certain, if not 1 year, 6 months, 3 months, some kind of a contract where we try to, arrive at I would say that certain quantity for a certain stipulated time, and then hold on to that quantity for a long time also. So it happens. I understand it's government business. Off the record, things happen very differently there. But then it's really difficult to say that this company will probably do it for me. This company would probably not do it for me. So there are a lot of variables when it comes to certain the government companies and needs to be taken care of.
Okay. Anyways, Mr. Mehta, thank you. I am an aviation supplier, so I was very much interested in that. And
Oh, that's great.
I will connect you for that. And I'm having the order value as well of yours, what it has been supplied previously to Bombay
Okay.
Airport. And yeah, so I'm aware of it. So, anyways, I'll be in touch with you if it is for the other aviations as well. Okay. All
Please,
the best.
please.
Okay. Thank
Yeah,
you.
thank you.
Sir, we have few questions in the Q&A tab if you can take one by one.
Yeah, sure. So I can see questions from Arjun saying that I wanted to know if Arabian is developing any product with respect to the data center cooling environment. If not yet, is that something that we will and going forward? Yes, that is on the cards. In fact, yesterday only we had an appointment with a company, a customer that for data center cooling only, immersion cooling systems as we call it, and the product is available with us. It is a question of going to the customer and marketing it, and that has already been started. Second is just wanted some more color and understanding on your volume mix. So that what was the volume number in this quarter? Also, can you provide some more color in terms of breakup between automotive and industrial? So the volume in this quarter probably is yet to be arrived at. I may not be able to tell you a number for now, but yes, the breakup between automotive and industrial still largely remains about 40 to 60. 40 being automotive, 60% being industrial. So that hope that answers your question. And next is Mr. Prashant Somani. Our profit has grown by 33%, but EPS grew by 10%. Have we issued new shares in this year and to whom? No, there have been no new share issuance in this year. It's the weighted average number of shares. So I don't know if probably you might, even I would have to analyze that, and probably we can get back to you on the exact details on it. But yes, to reiterate, there no new shares have been issued in this year. Second, the issue non-cooperating is already, I think, been addressed by Dharman. And the third one states that what kind of backward integration are we planning to do? Probably I had mentioned it on the slides also that there are certain projects in terms of amides, esters that are being planned for this year, and that will be definitely there as a part of backward integration projects. Next is by Rahil. Any growth and margin guidance for FY26? I think I've already answered that when it comes to a few questions that were asked by Smith. I hope you are able to get something on that. Next is by Varun, a split of revenue between automotive and industrial. Again, I answered this, which was there previously. Varun also asked that what is the business that we are planning to do in the Dubai subsidiary? How much revenue contribution we are expecting? It's at a very nascent stage, but what we intend to do is both imports and exports. Obviously, there are a lot of raw materials which comes in via Middle East, so we intend to buy good raw materials. We have a manpower already in place in Dubai, and obviously keeps on scouting for good refineries, good products which are available in UAE and exporting it to India for our self-consumption. At the same time, we also intend to export to UAE, and we have recently Dharman concluded his visit to UAE just last week, and we are happy to share that we were in talks with a distributor, and he is almost on the verge of conversion for our industrial range of products in UAE. So that will be also there on the cards. Secondly, yes, in UAE, we are also intending to sell some finished fluids from Lubrizol, from which we are partnered with. So that will also be there, which will be a part of the subsidiary. Next, I think is how much is the trading turnover out of 285 crore. So I don't think the trading turnover is more than about 10-12% of the total turnover that we have had last year. Hope that answers your question. Arjun also asked that as EV penetration is expected to increase from 4 to 5 to about 23% over the next 5 odd years. Could you give some color how this is going to impact Arabian? So as mentioned to you before also, out of the total market size in India of about 3,000 kilotons, we are probably at somewhere about 26 kilotons. So market size for us is too huge to really be impacted in terms of the EV penetration. If I was Castrol today, yes, I would have answered it differently. But when it comes to Arabian as a company, we have enough room to grow. This is not just India, but if I talk about globally, yes, that also is a very big market when it comes to electric vehicle penetration. Now, electric vehicle penetration is high in terms of two-wheelers, three-wheelers. The commercial vehicles, the heavy engines, I mean I would say the excavators, elevators, the mining equipments, all still largely remain diesel-powered or fuel-powered vehicles. So which consume major quantity of lubricants that are there in India. So that probably would still remain, and that would take a long time to get electrified also. And as I've answered these questions multiple times before, the penetration of vehicles primarily in India is a lot lower than what is there in China or what is there in the US. So more and more vehicles are today also being sold. And by the time probably we reach to 20-23% of EV penetration, I think the total market size of the IC engines based population of vehicles or the petrol powered population of vehicles. So these kind of or the hybrid vehicles would probably be much more than what it is today. So we don't foresee a slowdown in the next 10 years from now in terms of the total market size for lubricants. Secondly, yes, as I told you, automotive could be impacted for it, but there are certain water-based products, water-based chemistry, industrial products which will never get impacted, even if there is electric vehicle penetration. So that probably will also counter a lot of threat that we may have from EV. I
We
think
have
that
one question from Mr. Smith.
Yeah, so just one question and one request. So the question being, we were talking about that the bottling plant is one constraint which is not, or which would not allow us to, utilize our capacity fully. So are we also looking at doing some capex there and, increasing our bottling capacity in-house, or we don't want to do that because that's not our core business and we would want to stick to outsourcing? That's the question. And once you answer, probably I'll make the request as well.
yeah. So strategically, we don't want to invest there. Is primarily because it's better to outsource the non-core business operations that we have, where you don't really need to have too much of strategy in place or not too much of thoughts in place. It's more of a I would say a very monotonous activity which keeps on happening. So there are a lot of capacity which are available in India, which are still underutilized, unutilized, and I mean, on and off we keep on getting proposals from a lot of people. So we don't really foresee that we would be doing any big capex expansion in the current factory when it comes to bottling. Yes, if we plan to do some capex, which along with the manufacturing, it may require certain bottling also at the new facility probably. So there may be a small probably capex on the bottling side of it, but nothing primarily here in the current premises.
Okay, but the new factory or whatever, the plans are still like 12, 18, 24 months away from now,
Yeah,
right? Okay. And
yeah,
sorry, the request that I had was, you spoke about maybe coming up with monthly updates. So I request if suppose that can be like actually be considered, if we can be more proactive there, because what happens is since we announce quarterly half yearly results, and by the time we do these con calls, it is like 7, 8 months gap which is there in between two calls. So the information transparency somehow gets lost. So if suppose we can actually consider coming up with monthly updates on a proactive basis, it'll avoid giving investors any negative or positive surprises, right? Like it's better to know things as it is happening instead of knowing it in the hindsight. So that's the only request that I had.
absolutely. I think we are aligned to that, and I mean our IR team along with our backend team will definitely work on giving proactive updates every month. So it will be channelized through our IR team only. But yes, point taken that we will be proactively doing that in the coming future.
Perfect. Thank you so much. All the best. Thanks.
Thank you.
Thank you. Do we have any other question from any investor? If you want to ask, please raise your hand. As there are no further questions, I would now like to invite the management to share their closing remarks.
Yeah. Thank you everyone who's joined here and took the time out to hear us about what the company did, what your company did, and what we envision for the coming near future. And thank you, FinPortal team, for also organizing this very, very effectively. And we had a good interaction and hope to stay connected. I mean, obviously, we are all partners in business. So if there is anything that we can do together, feel free to reach out through our IR team to us. And we are always in for business. So uh, please feel free and looking forward to seeing you all guys again. Thank you.
On behalf of Arabian Petroleum Limited, we sincerely thank you for your time and continued interest. We appreciate your participation on today's call. You may now disconnect. Thank you and have a great day ahead.
Thank you.